The way is in training. Miyamoto Musashi. He is one of my favorite people in history. I love Miyamoto Musashi, undefeated samurai warrior, famous for his calligraphy, for his art, and for his sword mastery. And he really teaches us simple but profound lessons. The way is in training, the way to master what we do every day, and that is follow the stock charts, become a charting master, is in training. That's what we talk about here on a daily basis. Practice trading using your trade worksheets, daily market worksheets, weekly market worksheets, practicing again and again the mastery you need to develop. Think of the benefits of mastering being able to read charts, being able to use weekly vertical crossovers, 2-day crossovers, being able to see the direction that the market is moving in when we have established trends. It is profound and powerful. What does it take? 10 to 15 minutes a day, not 3 hours on a Saturday. Not a Sunday afternoon, not a Wednesday evening, 10 to 15 minutes a day, each and every day in the marketplace, working to understand what is going on. Practice trading time and time and time again. No matter how many times you get knocked down, you get back up and you focus. You keep a trader's notebook where you note down what it is you have learned. You keep up with the minutia and you focus on excellence, on perfect practice makes perfect. That's what you've got to do, my friends. If you're not serious about that, then I guess maybe you like the sound of my voice. You're wasting your time. Go on, get into real estate, do something else, but you're wasting your time in the market. If you're hit or miss with our channel a couple of times a week, you like some of the lessons, they sound cool, you're waiting to get $100,000 so you can throw it into some options and turn it into $1 million, you are not paying attention to reality. Reality takes 10 to 15 minutes a day, practice trading, working hard, learning these lessons, and all of the special trainings we put out each and every day to you. Great training today for everyone who subscribes for free. In the show notes, why we love Heikin Ashi candlesticks. Go to chartingwealth.com, sign up. Why do we love Heikin Ashi candlesticks? Because they are fabulous and they help us see price movement. Heikin Ashi means average pace in Japanese, I am told, and that is what we are looking to see. What is the average pace of price movement? Particularly when you couple the Heikin Ashi candlesticks with the derivative oscillator, price percent oscillator, Bollinger Bands, trend lines. It can help you see what's actually happening, help you separate the signal from the noise. Let's jump into these markets. The only thing that's down for the day just a little bit, the S&P 500 0.03%, NASDAQ 100 up for the day along with bonds and gold. Let's jump into these charts. Start off on the weekly as always. We see the price percent oscillator still heading up but slowing. Derivative oscillator losing some momentum. We have a green open box candle, but again, it's a weak candle. The high, 315.18. The prior week high, 315.31. So we're not even notching up where we were at the red spinning top the prior week. And that is the first time we have seen in many, many weeks the derivative oscillator losing momentum. And of course, we do see some significant, well, I would call it, we see weakening of the price percent oscillator. We go to the 2-day. Now we're still in a confirmed up move. 2-day confirmed down move. And what do we see happening? We see the price percent oscillator slowly pulling away from the red signal line. The latest candle we have, open box red, almost a hammer, spinning top, very little movement on the bottom, a lot of movement on the top. It's an open box candle, not a solid red down candle. But that price percent oscillator is continuing to weaken. And we'll continue to watch and see what we see. If we have some bump ups in price and this 2-day chart closes with a crossover going up, when will it close next? Oh, today is Wednesday. What might happen on Friday? might have the ability to use the weekend effect along with our price percent oscillator for a crossover if the market starts recovering over the next few days. So keep that in mind, pay attention to it. We go from the 2-day to the 4-hour. 4-hour chart sliding sideways as far as the price percent oscillator goes, and pretty much the Heikin Ashi candlesticks. 4-hour chart still positive, derivative oscillator losing momentum, price percent oscillator flat. So again, what are we looking for? Well, the most, how would I put that? It's not the most likely trade, but if we're going to be able to trade anything anytime soon, it will be a crossover going up on the 2-day chart. So we'll continue to watch for that. Put that important fact in your show notes. Keep an eye on it. Let's move on to the Qs. What do we see going on there? We see that the Qs is a green open box candle forming. Prior week was a red spinning top. We see that the high 2 weeks ago was 206.05. The high so far this week, 205.58. The high prior last week, 205.18. So we're a little bit higher than the prior week, not as high as 2 weeks prior. Price percent oscillator still going up, derivative oscillator losing some momentum. We go to the 2-day chart. What do we see there? Well, we see a red open box spinning top, pretty similar to what we saw with the S&P 500. Price percent oscillator is going down a little bit, mostly sideways, derivative oscillator gaining downward momentum. So again, wondering if there's going to be a crossover potentially going up. That would happen quicker than a crossover on the weekly going down. There'd have to be some significant down movement for it to pull it through. So we'll watch and see, just see how Friday's 2-day candle closes. We go to the 4-hour chart, pretty much a sideways slide. We are positive on the price percent oscillator and the derivative oscillator, which is losing momentum. Price percent oscillators slowly, little bit pulling away from the red signal line. We'll continue to watch, see what there is to see. NASDAQ 100 was up for the day, 0.53%, and as I said before, S&P 500, the only thing down, just barely 0.03%. Move on to bonds. Bonds up 0.79%. Now still confirmed down move on the weekly, still heading down a little bit. Derivative oscillator losing downward momentum. As far as the Heikin Ashi candlesticks go, we've got a sideways slide underway. So we'll continue to watch, see what there is to see there. Overall trend down. 2-day chart just won't cross over, will it? What we have happening now is a green open box spinning top. And again, up for the day, 0.79%. So that represents 2 days of movement. And we're not going to get a crossover going down for a jumping in point, at least at this point in time. Go to the 4-hour chart. It's trying to cross over going up. So again, we'll just continue to watch, see what there is to see, when we're going to reconcile the 2-day and the weekly moving in the same direction. Might be a while. So we'll continue to watch, wait, be patient, let the charts lead us. You can't push the market, but you can follow established trends in the market. Now we go to gold lastly. What is gold doing? Well, gold is still in a confirmed down move. We go all the way back to the week ending the 27th of September, when we had that weekly vertical crossover. Gold still heading down a little bit. Derivative oscillator losing some downward momentum. We have a green spinning top forming so far for the week. Again, we're 3 days into that. We look at the 2-day chart and bingo, look at that. It was laminated and it's slowly but surely trying to pull itself up. Again, hasn't recovered anywhere near it was when it crossed over going up back on the 5th. We never called it anything other than that. So we still have a confirmed up move on gold. We'll just continue to watch. Again, don't have a trade now because the weekly's still down. 2-day is up. Again, if we can get a nice clean crossover going down by Friday, then that would be the the most likely ability to get into a trade soonest is with gold going down. But that may very well not happen. But that would be the cleanest, easiest way to get into a move. But you know what, folks? You guys know it. I say it all the time. It's what the market does, not what we want it to do. We follow the trend. And the trend's all over the place right now. Nothing confirmed. So what do? We keep our powder dry. You lose money, so hard to make it up. Never have trouble with profits. Okay, what do we see on the 4-hour chart? Crossed over going up in the morning. More gains in the afternoon. Again, gold up 0.69%. So we've got a lot of flux going on in the market. Market's trying to find its legs, whether it's gold, bonds, or stocks, and we'll let them sort their way out. Once they do, we'll make decisions based on what the charts tell us. Now, what do? We just wait. We wait, we practice, we keep our daily worksheets, our weekly market worksheets, and we be ready for practice trades as they become available. That's where we are, folks. Not super exciting right now, but that's okay. You know what? We still do the work, and we still learn by doing the work. The glory will come for those who stay with it. Most won't. Most people will be losers. They will not figure this out. They will quit because they don't have staying power. But those of you who are dedicated to doing this because you know you will stay with it as long as it takes, you, my friends, will have the prize. God bless. All the best from the whole team at Charting Wealth World Headquarters.